Welcome back to the channel. I am James, and today we are looking at the Microsoft Corporation, ticker symbol MSFT. They have just released their Q3 earnings right now, and we're going to be going through these updated numbers, talking about where Microsoft have gone well and where they've gone poorly. And then at the end of the video, we're going to be looking at my discounted free cash flow model and Buffett-Graham intrinsic value model based on these new numbers to see if this stock is a buy or a sell. So let's get straight into it. Microsoft is currently in after hours $274.30 a share. The market has reacted relatively favorably, up 1.5% in the post market. You can see that from the year to the day, Microsoft is actually down 20%. Has had a pretty bad run from its time earlier at 334, and if we go to the last year, it still is up, which is about where the market's been. But this stock is this the right time to buy? Well, that's really the question I'm going to be answering today. So let's get straight into the numbers here. We've got the income statement, we've got the 3 months ended, and then Microsoft have the 9 months ended. And we're going to be comparing them and looking at the Yahoo Finance numbers as well. So where does Microsoft make its money from? The revenue is through two main things, the product, and then the other side, which is the services, which is obviously Microsoft's web services, for example, Azure. And let's have a look. So they've got 16.8 billion this time in the last year in that quarter, and now that is up to 17.3. But services is where the money's being made, 24.8 billion to almost 32 billion. Total revenue is up 8 billion, 41 billion to almost 49.3 billion. And if we look at the 9 months, you can see it's up as well. If we just quickly go to Yahoo Finance here, this doesn't include the latest numbers, but you can see that the revenue has been steadily increasing over the last few years and is currently at, based on my calculations, over, well, sorry, not based on my calculations, with my calculations, including the 3 previous quarters and today's number, the trailing 12 months for Microsoft is now at 192 billion. So revenue is on the up massively. Right, next, first, can you please give a like on the video? It really helps me out, and subscribe if you're not already. Let's get into the next thing I look at, which is the profit. How do we get the profit? Well, it's revenue minus all the cost of revenue. We'll quickly look at the cost of revenue. You can see they are up slightly, 13 billion to 15. Product is relatively flat. They managed to squeeze some more revenue out there, and with 3 billion extra in the services and other, but they did manage to generate almost 7 billion on top of that. So 13 to 15 billion is on the upside. You can see here again the trailing 12 months, absolute monster in terms of generated money. Microsoft 146 billion, 46 billion. That's 100 billion gross margin. Obviously, they do have other things they need to do as well. What does that bring the net income to? Well, it was 15.4 in the equivalent quarter. It is now to 16.7. So profit is up massively. And if we go here again, this is for the annual. This time in 2018, their profit was the same as this quarter, up massively. 16, 39, 44, 61. Trailing 12 months is 71. But with these latest quarterly figures, the profit is actually 72.5 billion. So up massively once again. And let's have a look at another thing I like to look at. Are they buying back their shares? Yes, they are. Microsoft are buying back their shares. 7.3 billion to, 7.5 billion, and is now under to 7.49. If we just go back to Yahoo Finance as well, you can see they have been steadily buying back their shares, which is good for investors. For example, this is a smaller example, but say there was a company with 10 shares and you own 1 share, you would own 10% of the company. You would be able to get 10% of those profits. If they then bought back 5 shares, it would now be 5 shares of the company. You would still have that 1 share. You now own 20%. That gives you a bigger piece of the pie. So they are giving investors bigger pieces of the pie, and who doesn't like more pie? That's a terrible analogy. Right, now we're going to look at the free cash flow statements. How do we get free cash flow? It's cash from operations, which is here, net cash from operations, minus capital expenditures, acquisitions of purchases and equipment. Now, Microsoft, unfortunately, don't do the calculations for you, which is why I'm here to help you guys out and make this as easy as possible. So if we firstly look at the net cash from operations, up 22.1 billion to 25.3. And CapEx is relatively flat, 5 billion to 5.3. You can see in the quarter, 54.64 CapEx 14 billion to 17 billion in that time. So what does that give a free cash flow for this year? Well, actually, I'm going to, for the trailing 12 months. Let's have a look at the previous ones. 32, 38, 45, 56 billion was 60 billion the trailing 12 months. Well, that is now up to 63.6 billion. So absolutely massive free cash flow company is Microsoft. So what do we do with this bit of detail? We go to my discounted free cash flow model. This is based on analyst estimates, and you can see that we've calculated based on the free cash flow rate, the revenue rate, cost of sales, and net income margins. We've averaged all these out, and this gives us our estimated future free cash flows of Microsoft. 72 billion by the 12 months of this quarter, 82, 91, 101 billion. Terminal value of the company discounted to today's value. What does that give us? A price of Microsoft? Well, actually, according to discounted free cash flow model and its current price, Microsoft is undervalued. And it's saying the recommended price is $307 a share, which is a 13.5% discount, which is very surprising. Normally, these big tech companies, I know Microsoft is not the, because of its size, not a massively fast-growing company, but obviously you can see from these revenues it does have a weird perception, and it is still undervalued by a discounted free cash flow model, which I think is very surprising. Definitely a great time to buy. Next, we look at the Buffett Graham intrinsic value. What is this? Earnings per share, expected growth rate, and the bond yield that we can count. This is the Buffett Graham intrinsic value. That's what they were using back in the day. And what does this say? Well, actually it says it's definitely a buy. $390 a share is the fair price. And that currently means it's at a 44.57% discount. So both of the models are saying it is a buy right now. And it's hard to argue. I mean, the stock price was at almost $340 a share, which would have been a buy according to both models, definitely. And this was with less on the revenue, profit, and free cash flow. So overall, it looks like Microsoft is a buy. Market's reacting to it very favorably. Everything is up. The main driver, I think, of Microsoft, and this is where it's going to go, is their subscription-based models and on the web services. If you just see how much this is as a percentage of the revenue. You know, Microsoft was a product service originally, and then this, product company, and now the services. It's just a massive cash flow generator for them. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if you're not already, and I will catch you guys maybe later on today. We've got plenty of good earnings out. Give a comment down below if there's any stocks you would like me to review. If I quickly have a look at my favorite website, Earning Whispers, I'll actually just go on the Twitter at Earning Whispers. That's probably the best one. They do have some interesting things which tell you what stocks are coming out. And for today, well, we do have Alphabet and Visa. I'll either do one of them today or tomorrow. And then on the next day, we have Boeing and Spotify, which I know you guys are interested in. Right, guys, thanks for watching. Please give a like on the video, as I said before. Subscribe if you're not already, and I'll catch you guys next time.